All right, guys. What's up, everybody? Welcome back. Okay, today we're gonna talk about something looks simple, but this one thing alone separates traders who survive from traders who keep getting trapped, and that is using candlestick patterns correctly, not randomly, not emotionally, but using candlestick patterns specifically as confirmation on key levels. Okay, so today we're gonna talk about the key levels also. And by the way, I'm sorry, my camera is in trouble, so I cannot use my camera right now, but it's okay. Okay, let's be honest. Most traders, when most traders see one pin bar, for example, and most traders immediately press buy or sell, and I think almost everybody has done that before. When you see an engulfing candle, you feel confident and then you enter. And then suddenly the market completely destroys the setup, okay? And then you start thinking it's not supposed to be reversed or not. And the problem is the candle itself was never full confirmations, and this is where many traders misunderstand price actions, okay? Candlestick patterns are very powerful, but only when they appear in the right locations, okay? And that's the key. So today I'm gonna show you how to stop treating candlestick patterns like random signals and start reading them like real market reactions, okay? And trust me, once you understand this properly, your entries become way cleaner, and then your patience improves, and honestly, your confidence becomes more stable too. So if you're here live right now, you can type in the chat, what's your favorite candlestick patterns? Is it a pin bar or engulfing or doji? You can share with us in the comment or chat below, okay? Yeah, a quick reminder before we continue. Everything we discussed today is for educational purposes only. This is not financial advice. I'm simply sharing how I personally approach reversals and confirmations in the market. And always remember that trading always involves risk, especially in gold. So always make sure you manage your risk properly because even in high probability setups, you can fail sometimes, okay? That's just a part of trading. And for those who new here, my name is Daryl. I've been trading for years now and mostly focusing on gold, GBP pairs, and intraday price action setups. And over time, one thing became very clear to me that most beginner traders focus too much on finding the perfect indicators, but experienced traders usually focus more on reactions, okay, and also timing, liquidity, and confirmations. And candlestick patterns become very powerful when you combine them with those things, okay? Yeah, let's talk about the real problems and why do most traders fails at entries. And honestly, this part is painful because it happens every single day, okay? And first mistake is entering without confirmations. When price touch resistance or support, you just instant sell or instant buy, and then there's no reactions, there's no confirmations. You just predicting or sometimes maybe just guessing, and it's very dangerous. Yeah. The second mistake is trading candlestick patterns everywhere, and this is very huge. When people see pin bar in the middle of nowhere and they treat it like magic, okay? But market context matters. It matters a lot. Yeah, you have to see the context first. You cannot always use the pin bar in the middle of nowhere and hoping that that pin bar can save your trade. No, it doesn't work like that, okay? And the third mistake is ignoring key levels completely, and this is where most traders lose structure because candlestick patterns alone mean almost nothing. Yeah, it means almost nothing without locations. And then another big one is fear of missing out is also a very big trouble. You probably experienced this before. When price start moving fast, you feel like you're missing the move, and suddenly every candle looks tradable. That emotional state destroys your entries. Okay, and honestly, most traders are not losing because their strategy is terrible. They're losing because their timing is so emotional. Yeah. So that's the core problem. And now let's go deeper into the key levels. Because this is where candlestick patterns actually become meaningful, the key levels. Key levels are simply areas where the market reacts aggressively, okay? It can be support, it can be resistance level, it can be supply and demand zones, it can be previous highs or previous lows, it can be liquidity areas. And those areas or those levels is where real decisions happen, okay? And this is very important because market reactions are not random. When price reaches important levels, that's where buyers and sellers become emotional. Yeah, that's where stop loss get triggered, and that's where liquidity enters the market. And most importantly, that's where institutions start getting active. And now you can think about this. If you see a bullish engulfing candle in the middle of nowhere, does it really mean much? In fact, it's not really mean that much. But if you see the exact same engulfing candle at a strong support level after liquidity sweep, and now it suddenly becomes more interesting because locations gives meaning to the pattern. Yeah, that's the difference. So you have to pay attention to the locations. Okay, this is very important. Okay, this is how we actually confirm reversals. This is where many traders make mistakes because they treat patterns like instant entry signals. Yeah, but confirmation is deeper than that. Yeah, for example, pin bars. Let's say pin bars. A pin bar basically show rejections. Yeah, all of us know that. Okay, the market tried to continue but failed aggressively, and that's informations. And now next one is, for example, engulfing candles. Okay, those are momentum shifts. One side completely takes over than the other. And that's why engulfing candles are powerful near key levels. Okay. Now another thing I really pay attention to is long wick candles, especially in gold, because a lot of the time that's actually liquidity grab behavior. Okay, price sweeps above highs or above or below lows, triggers breakout traders, and then reverse aggressively. That's a classic liquidity behavior. And honestly, this is why waiting for candle close matters so much. Okay, so you have to wait until the candle closing. Okay, candle can look bullish, then completely change before closing. So patience matters a lot here. Yeah. All right. Now let's put everything together. This is the framework I personally use. Step one. You guys can identify the key level first. Never start from the candle. This is very important. You can start from the area or a key level, and then after that you can look the candlestick. And then step two, wait for the price to approach the level. Don't chase the market. Let price come to your zone or your level. Okay. Then step 3, you can watch candlestick behavior carefully. Do we see rejections? Do we see engulfing candlestick? Do we see a strong wick? Or do we see momentum slowing down? Yeah. You have to pay attention of those. Okay. Then step 4, we wait for confirmations or a structure shift, momentum change, or strong candle close. Okay, this is what separates confirmations from guessing. Okay, this is very, very important. You have to wait for the confirmations. And then finally, after all of those, you can execute your setup or you can entry. Yeah. Usually, I prefer confirmations entry or retest entry because honestly, being slightly late with confirmation is usually safer than being early trapped or FOMO, fear of missing out. Okay. For me, I usually use the retracement trading because I think that retracement trading is more suitable for my style of trading, which is a scalping. Retracement trade not only gives you a perfect setup on a zero floating setup, but it gives you a good or a better risk reward ratio. So for me, retracement trade is good. Okay, it's better. Okay, next one. Let's talk about the executions. Okay, because timing matters a lot, as we know that. Best sessions for this strategy definitely London Open or New York Open. That's where volatility comes in. That's where liquidity gets swept aggressively. And as you know, as a trader, we need that volatility, we need that range, we need that aggressiveness of the market. Okay. Personally, the setup I love the most is like this. The first liquidity sweep first, and then strong rejection candle showed up, and then market structure break, and that combination is extremely powerful. Only 3 of those combination is really, really powerful, and it's really simple. It's really easy to understand, and yeah, you can try it yourself. You can backtest it yourself, and you'll see the power of that of those combinations. Okay, and for the stop loss, usually below or above the rejections area. I just keep it logical. And for the taking profit, usually 1.5 to 3 times risk minimum. Okay, it depends on the market. I usually only use the 1.5 risk minimum. Okay, that's the minimum of my risk reward ratio. And honestly, one thing I want you guys to remember is you don't need to catch every move. You only need one clean moves. Okay. All right. Before we finish, let's recap the biggest mistake again. Trading candlestick patterns without context, it's very, very dangerous. Uh, Ignoring higher time frame trend is also a big mistake. Entering before candle close, once again, you need these confirmations. Don't do that. Forcing reversals during strong momentum, you cannot trade against the trend. And emotionally chasing entries, this is very, very dangerous because it's connected with the psychological. So you have to make it stable. Okay. Uh, Now the key takeaways. Candlestick patterns are not magic signals. You have to remember that. Once again, it only happens when the location is great, when the timing is great. Okay, not every candlestick patterns can be used. Okay, once again, not every candlestick patterns can be used. You have to pay attention to the locations. to the context of the market, to the trend, and of course you have to wait for the confirmations. Um, and then key levels give context. That's why key levels is very important for candlestick patterns. And then structure give confirmations. Yeah. And patience give better entries. Once again, patience is needed in this kind of strategy because you have to wait for the best confirmations to happen. What you need to know is smart traders wait for the market to confirm, and emotional traders try to predict every reversals. And honestly, that small mindset shift alone can completely change your trading. Okay. All right, guys. That's the theory. That's the theory of this webinar. Now let's move into the charts and look at some real examples together. And after that, we'll do some Q&A. So if you have questions, you can drop them in the chat. Okay. All right. The first one. Let me open this. Okay. We go to gold first. Okay. Let me clear this. All right. Yeah. Okay. First, I want to discuss about this gold chart here. Since we will use the 5-minute time frames for our entry, first we have to see the bigger time frame first, which is you can use a 30-minute candle or 1-hour candle. Okay, it depends on your preference. Okay, so in this case I will use the 1-hour candle. As we can see in the 1-hour time frame here, the trend is very bearish here. This one is the bearish trend line, and then this is the progressions of the bearish trend line here. And then as we can see, the price in 1-hour time frame is still in very bearish momentum, okay, or bearish trend, you can say that. So we have to find a key level in this bearish scenario. Okay. For example, this is there. You can see this is a fair value gap. You can use this as a key level here. So the idea is when the price is coming to this area, you can lower your time frame to your entry. In this case, is a 5-minute time frame, and then you can find a candlestick pattern here, a reversal candlestick pattern. You can use rejection candle like pin bar. You can use a bearish engulfing candle, and many more. Okay. So we expect the market to go to this area first. Okay. Let me. Okay, this is the sell area. So we expect the price is going to this area, and then after that we can see the candle pattern here. Okay. Now, since we know the price may be going to this area, we can find another buying setups here. Is there any buying setups here? So you can go to your 1-minute time frame. This kind of scenario is not necessary because this is very high risk. We are counter trending, okay. Because we are looking for the buy setup, we are automatically counter trending this trade, okay. So this is very dangerous. It's not necessary to do, but when you see opportunity or you think that you have a good setups, and then there's still margins like this here, you have like maybe maybe 100 pips to this area, so that's the opportunity. You can find it. Okay, like this. Clearly in the 1 minute time frame, the price is moving upwards or uptrend like this, and then the price here is forming a consolidations phase like this. So I will make this level as a support, and we can find the buy area. The scenario is the price will move down to here to sweep the liquidity over here, over this level. And then when it happens, we see if the market bounce back, and of course we have to see, is there any candlestick pattern in this support level. If there is a candle pattern here or candlestick pattern here, we can entry to buy. And the target, it's maximum this area, that's maximum. If you want to take profit in this high, it's okay, but you have to understand that the maximum level is in this area, because that's the important key level on the bigger time frame. So we cannot avoid, or we cannot set or take profit above this area. Very dangerous. All right, that's for the gold. And next one, we're going to see the euro. For the 1 hour euro, it's same with gold. It's still trending to the bearish or to the downside like this. And then as we can see here, there's a lot of wick, or a lot of shadows in the candles, especially in the upper area. So this is what we call upper shadow or upper wick. So it gives us information that there will be a strong rejections to the downside, because the wick is in the upside, or the shadow is already in the upside of these candles. So our assumption is the price is pressed to the downside. Now we jump to the lower time frame here. As we can see here, this is the high and this is the false break, or we can say the sweep here, the liquidity sweep here, and also the candle here. There's a candle pattern, there's an engulfing here, followed by a strong bearish momentum here. So this is very good informations to sell setups. There's also a head and shoulders pattern. This is the neckline, and it's already breaking up. So breaking down, sorry. And then what we can do here is waiting to the price going back to this level, and then we have to watch, or we have to pay attention. Is there any candlestick pattern or reversal candlesticks that's already formed here? So short positions here, stop loss here, and then the TP is 1.5. Okay, that's the idea. Okay, so we just have to wait until the price comes back to this level or this area. Okay. Okay, for the I'll give you guys the example for this strategy. Okay. First, in the 5-minute time frames, we can see the trend first. For example, this one. Okay, let me replay it to you guys. Okay, sorry, I cannot replay to you. Okay. Okay. This is for example. You can see the price is moving or making higher highs and higher lows here, and then from this kind of situations, is the price is retracing. So we have to watch for the key levels. This is the consolidation, so we can make this area as a key levels here, and then we just have to wait like this until the price come back to this area, and then after this we can look for the candle pattern or candlestick pattern, because the price is already coming back to the key levels. Yeah, this is what I meant. And you can name it a buy area, the key levels, and then we can see this is the candle pattern, the inside bar, like this. This is the inside bar. Okay. So the next candle breaking this high, we can enter. That's the confirmations. Okay, so we can enter after that. Yeah, like this. This is not closing. It is also not closing up. We just have to wait until the price is closing. Okay, this is the confirmation candle because it's already closed. So this is the long setups here. Okay, like this. Okay, and you can wait until the price is running like this. Okay, this is already you can set up 1 to 1.5 or 1.5 risk reward ratio, or 1 to 3 point risk reward ratio. It's up to you guys. Okay, but the minimum is 1.5. Okay. All right, that's the example. So coming back to the chart here, leave. Coming back to gold. Let's see gold here. Is there any? Okay, no confirmations. Let's see if the price here is rejecting. So it means that it's a liquidity sweep to the downside. So we can sell this area. Okay. What we're going to do is we make sure that there's a candle close above this low of this candle. Why this candle? Because this is the candle who swapped the liquidity in this level, in this area. So the candle must close below this the low of this candle, okay, which is the red line I draw. So we just wait. If there's a candle close below this level, we can entry sell, or we can sell. Okay, you don't have to wait the price to go here. We just entry here like this. This is not closing, okay, so we cannot enter yet. We have to wait until the price is close, okay, so we cannot enter yet. As you can see, this is why you have to be patient, right? Yeah, because confirmation is very important, like I said before, because this is not closing below this level. Look at the price, still can coming back to the upside and swap the high of these candles. Okay, so the confirmations is very important. You have to wait for the candle to close to your levels. Okay, that's very important. If there are any questions, you can ask me in the chat. Okay, the candle still making these highs, so we can pay attention to these levels. This is also a swap, okay. This is the highest candle, so we have to wait for the next candle to close below the low of this candle, because this is the highest candle who swapped this liquidity. Okay, now this is the low. Okay, we just have to wait until this candle close below this level I just draw. Okay, there's closing below this level, so we can enter here, stop loss here, and then reach 1.5 risk reward ratio, target here. That's the strategy. Okay, very simple. As long as you know the levels, yeah, it's very objective. No emotionals needed in this kind of trade or this kind of strategy. It's very simple. You guys always can use this, and it's very good, okay, for the success rate, okay. Okay, if you guys have questions. Okay, don't forget, if you guys want to trade, you can use, or you can try Elevate. You can find the registration link somewhere in this video, and then you can deposit using a promo code to get a deposit bonus. And yeah, download the apps on your Play Store or App Store. There's a lot of stuffs there which can help us as retail traders. Okay. Okay, guys. If you have questions, once again. All right. If you don't have questions, I think that's it. Thank you for watching these webinars, and I hope what we discussed today can benefit you for your tradings, to make your tradings better. And I'll see you on the next webinar for the next week. Okay. Thank you, everyone. I'll see you on the next video. Bye bye. Thank you.